Hi friends, I am bringing to you the how to swing trade using the inverse head and shoulders pattern. I've uh, I have basically cherry picked two stocks where I found this pattern. The first one of which is Aegis Chemicals, and I have used trend lines here basically to draw the head and shoulders pattern. And this basically is the you can say this is the neckline for this pattern. Now, what is the inverse head and shoulders pattern? This pattern basically is a pattern where price has gone up and price is coming down. The bears try to bring the price down, but the bulls fought back, and then the bears brought it down even further. But but the bulls but the bulls fought back again and raised the price again. Again, there was bearish pressure, and basically you have a bulls basically coming out fighting with huge volume. So basically, the head and shoulders pattern textbook is like what I've drawn here. This looks like a textbook. This is called inverse head and shoulder because if this was the other way around, this is like the head of a person. This is left shoulder. This is right shoulder, but only in reverse. So it's called inverse head and shoulder. This is a good pattern. This is a bullish pattern, and it has around an 85%, 75 to 85% accuracy rate, and it's a very reliable pattern. And this can occur right now. It's occurring right now. This is occurring basically in a sort of a trading range or in the up move, because if you see the price here is in a trading range, and price here is in a trading range, and then price is moved up, but again gone into consolidation. So this is a type of consolidation in a trading range, and you have a final breakout here with huge volumes. Now, this is not exactly, if you think, the textbook pattern is the straight line here, straight up, straight left, shoulder, this. So this is not what happens in real life. So you will basically have to use your naked eye. And if you keep going through charts over a period of time, you'll be able to recognize patterns. So basically, if you see here, when the price is coming down, the volumes are less. Just look at the volumes here. Can you see the volumes? Now the volumes are less, but when the bulls bought it up, and now again when the volumes are less, and they spike a bit towards the head side because the bears. This is basically an impulse move by the bears, and this is basically an exhaustion. Sellers have all got exhausted. Whatever they had to was bought, and there were no sell orders left, so price couldn't go down anymore. And then slowly, if you see the volume here, slowly but steadily, the bulls are taking the price up. Though the bears tried stalling, you see one or two dojis here. Slowly but steadily, it's going up. And if you see, bulls also tried with good volume here, almost three times the volume. But then again, you had a bears again bought it down. And then again, a huge push here with this candle. So, this is the left shoulder, this is the head, this is the right shoulder. And if you notice here that this shoulder is lower than this shoulder. Meaning first time the bears brought it down, then they brought it down to the head. But this time they were not able to bring it even to this level. Even if it came up to this level, it's fine. But if you say this is not a inverse head and shoulder, because human shoulders are exactly at the same level, right? Unless their person is deformed. So as I told you, this is a chart pattern, and you may get bookish chart patterns, but most of the time you won't. So, but by and large, this looks like a head and shoulder, so it's a head and shoulder. Now, what is your what is what is your entry point? What is your take profit? So this is the shoulder, this is the head, this is the right shoulder. This red line is a neckline because it's connecting both these shoulders. Okay. And your target is basically you draw price range from the point here to your neckline. This is 20%, it's showing 20%. So 20%, 20.69 is your take profit, and you will enter when this neckline is broken, and you can put a buy order here if you're not monitoring the market, and your order will get fulfilled here. Your stop loss will be below this shoulder. Your stop loss will be below this shoulder here. Okay, your stop loss is going to be somewhere. Your stop loss will be somewhere below this shoulder, and your entry point will be somewhere here above the neckline. I'm going to make it green. Green is your entry. You can enter something like long. This is your SL below the right shoulder, and your take profit, as I already showed you, is from the neckline, from your long entry to your this, and you have already achieved your profit, take profit here. Now, it can also happen that you miss this entry here. If you miss it, too bad. If you have not placed a buy order here above the neckline, after this candle, there was another doji, and then you got this candle. But if you didn't place a buy order here, then you have to be in the market and then basically keep monitoring your watch list, and then you can enter a buy order after an hourly close or whatever, or directly at market rate if you see good volumes. Up to you how you want to enter. And once your order is executed, you can put in your SL and your take profit. Now let's look at something here. From long to SL, it's 10%, and you have your target as 20 point something. So it's almost like 1 is to 2, but this is where you should place your SL. If you so decide that you do not want to take so much of risk, then you can place it at a point of your choosing. You can place it at the low of this candle, or maybe a few paisa below the low of this candle. Technically, if you go by the books, and what they'll tell you is you place it below the right shoulder. But it's up to you. You can place it below the low to reduce your SL and increase your position size. Then again, there is a chance that it will swing, break your SL, and then go forward. Up to you how you want to take it. But at least you get a 1 is to 2 here. And if you had kept it somewhere at the middle of the candle, uh, uh, um, uh, for example, you kept it at the low of this candle, then it will obviously be even more. It'll be 1 is to 3. Again, up to you. So, you have understood what this pattern is. It's a bullish pattern. And even if the price is in a downtrend, this forms, then this is a bullish reversal pattern. If this is forming in the middle of a trading range or when price is going up, then you can say it's a price consolidation or bullish continuation pattern. In any case, this trading pattern forms does not form very easily on each and every chart, and but when it does, it represents a period of consolidation, and finally the bulls win the battle, and you enter on good volumes, and your take profit is from the point of the head to the neckline, and you would make good profits. Now, if you see here, we are out of the trade, but it's come down here, and again it's going here. It's come down here, and it's even taken out a SL. If you see your spike, if you see the spike, this spike has, I think, specially come so that they can take all the SLs which are below this left shoulder, because smart money knows that thousands of SLs are placed here because chart pattern is nothing basically but human psychology made by Japanese traders early on, and these patterns keep repeating in the market because people behave the same way to the same circumstances, and that's how these patterns form. And see, now this is taken out. I would not be surprised if this went double this length. It keeps going up, up, up. For some people who may have not taken the take profit here and would have kept the SL, not trailed it, they would be taken out. I mean, just assume for a minute that your target is not met for whatsoever reason. Maybe you kept your SL here, so you wanted 1 is to 2. Maybe somebody kept their SL here. So it's not fulfilled and you did not touch your SL and it's taking you out here now. And now it will go up and up and up. It may or it may not, but I'm just telling that there is a good chance that the price having taken out this stuff is now going to go in the direction that you thought it would. Now, let's go to Mahalife. Another chart, another pattern. Pattern is the same. I've taken the liberty to mark this, otherwise I would have to spend too much time, doing this, and it would just bore you, viewers. I would waste minutes, uh, putting this together, and you would be bored to death, and you would probably fall asleep, and then that would not be good, right? We want you to be attentive so that you can basically learn something and make money. Going to join the neckline. So here, if you see the lines are going out, reduce the line here, and I can reduce the line here. You see, this is also neck and shoulder. See how price is going up. Bears tried to bring it down. Price was in an uptrend, higher high, higher low. Bears suddenly decided, or people who had bought in here, decided to take profit, and prices started coming down. But prices are coming down with low volume. Again, we have a big, huge candle, almost 3 times the volume, where bulls are trying to go up. But again, bears, this neckline is kind of sort of become a resistance, invisible resistance. This is sort of uh, become a resistance. Earlier it was support and then it broke through and now it's become resistance. Prices are coming down with low volumes and again prices are going up slowly, 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 slowly. Reached up to a point and then the bear said, to hell with the bulls, we are going to bring the price down. We don't like people making money in longs. So they started shorting and either in futures or started selling in delivery and down, down, down we go up to here. And the bulls say to hell with it. We've had enough and here you go. Can you see this big volume? 2.18 mil. Almost 7 times the volume. Huge bar, huge volume bar. Price gone up by 1.51%. And then again, bears tried something. Slowly, slowly, slowly. Finally, with good volume, it has managed to break the neckline. So if you placed your order here, okay, assuming that you're a working professional, don't have the time, you place a buy order here, and you would place a buy order, and you would place a SL order below the left shoulder. SL, and here you've gone long. Now, There, you have achieved your. You have just a minute. Huh? This is not proper. This should be here. This is wrong. And here you are. Yeah, why is this? This is 15.76. So this should also be 15.76. You get what I'm trying to do, right? So this will basically be a 15.76 is your, I don't know why it's not coming, but anyway, you get the point, right? So basically, you'll get 15.76 is your take profit here, and you would have achieved it or not. You didn't probably achieved it. Price spiked up to here and went down. So, but again, you're still in play if you're not moved your SL. You're still in play if you maintain your SL here. Price has come down and is now going up. Once it crosses EMA 20, you should be good to go because this is by and large a reliable pattern. See, nothing is 100% in trading. It's all a game of probabilities, chart patterns, candlestick patterns, moving averages, indicators, price action. All this is basically to help give you an edge in the market. And you need to be looking at profitability over a period of trades. Every trade is not going to be profitable. You need to learn to trade like a casino. Over a period of 100 trades, if you're net profitable, you're good to go. If you have got a good risk reward ratio, you have a good entry strategy, you have your exit criteria, you maintain your SL, you follow your rules, then you're good to go. Profit or loss doesn't matter in a particular trade. Whether you followed your rules does. And if you feel that you are consistently losing money, then obviously something is wrong and you need to be introspect, keep a trading journal and see what is working, why is it working, what is not working, why is it not working, and then improve. We are here to continuously improve so that we can better our game. And then sky is the limit. The only competition you have is yourself. Please don't compare yourself with other traders. Everybody has a different journey. Everybody is at a different stage. A white belt should not compare himself with a black belt. Otherwise, he'll go into depression. Similarly, a person who just started cycling should not compare himself with a champion cyclist who's earning gold medals internationally, who's pedaling 40 to 60 kilometers daily to be where he is. So please don't do that. Just continuously improve and you're good to go. If you learned something from this and you enjoyed this, please subscribe to my channel. Give me a like, subscribe to the bell icon so that you're notified when I make new videos, and forward this video to people who are serious about trading and making money. Thank you for watching and I'll see you in the next video. Take care and all the best.